Hi, and welcome to the Stock Scores Market Minutes for April 2nd, 2018. This week I want to talk about the importance of watching the market index when you are trading. The overall market trend is important to how you focus your trading strategy. Are you in an uptrend? Are you in a downtrend? But more important, where is price relative to the trend line? You could be in a downtrend, but if you have fallen way below the trend line, then the market is oversold and likely to get a little bit of a bounce higher. Are there signs of a reversal? Are you getting a possible break of the trend line? Or perhaps if you're in a downward trend, are there rising bottoms building up toward the trend line? That is a potential reversal of that downward trend. Now, I do this analysis on multiple time frames. If I'm day trading, I pay more attention to the trend on the 15-minute chart than I do on the weekly chart. But if I'm a longer-term investor, then the weekly chart or the daily chart trend is going to be more important. Keep in mind also that some stocks can do well against the market trend. You could have a market trending lower, but a company trading very abnormally to the upside may be able to disconnect from the market, albeit for a relatively short time, as the market prices in that company's positive fundamentals. So watch the market index, no matter what style of trading you are due, and get more aggressive with your longs when the trend favors the longs, and get more aggressive with your shorts when the trend favors the shorts. All right, well, let's get into the market and decide what is being favored right now. This is a chart of the S&P 500 going back for a month. And you can see that the short-term trend is down and we are below the trend line, although just. Now over here, we were quite far below the trend line, so the market was oversold and likely to bounce higher. We then got oversold again, and now the market bounces higher. We're at a critical point because we have built a rising bottom on this chart and we are right at the downward trend line. So we could see a break to the upside in the near term, in which case I would become more of a buyer than a short seller. Looking at the long-term trend, we are in a long-term upward trend, and we are right at the trend line. Up here, we were quite far above the trend line, and so although we were in an upward trend, we were also overbought and therefore susceptible to a pullback, which is what has happened. The market has now pulled back. It has held the upward trend line, and until it breaks down through the trend line, I would be relatively optimistic about the market. Although given the volatility and the weakness of the last 2 months, I'm also going to be quite cautious because we could break the trend line. Moving along to the Russell 2000, we are in an upward trend and we are pretty much at the bottom or at the trend line. We haven't run away from it, so we're not overbought in that upward trend, but we're also at a critical point because we could easily, with one bad week, break the upward trend line, in which case we would have to get bearish. For now, we could say that this is a bullish or neutral chart, given that we are fighting against that trend line of support. Onto the Canadian market, we are in that downward trend line there. We were quite oversold and we've come back to it. Now, looking over the last month, we're relatively neutral. We've been going sideways for a month. We got a little oversold. We came back. Maybe we break the downward trend line next week. This is a neutral to slightly bearish chart because we're in that downward trend, but we're trying to break the trend line. Long term, well, the upward trend line has already been broken. I've talked about that many times. We have built a falling top, but we haven't broken critical support yet, so it's kind of a neutral chart with some caution. On the TSX Venture, we recently broke down through some support right in here. We have fallen back to the horizontal support zone, which we have held so far, but we have consistently falling tops, which is pessimistic, so I think you want to be fairly cautious with the TSX Venture, although it is at some support where it could make a little bounce in the short term. Perhaps you get a few up days or maybe even an up week. Doesn't mean that we are out of the woods yet until we break the downward trend line. Onto the Treasury bond market, which tells us the direction of interest rates. We've had another solid week to the upside for Treasuries, which means interest rates have fallen. That's a positive for the stock market, but we're not in an upward trend for bonds because we are below the trend line. We basically got oversold, and now we're coming back. We are going to find some resistance when we get to that downward trend line. And on the US dollar, in a downward trend, we fell away from the trend, we came back. We fell away, and now we are coming back. We're almost at the downward trend line, at which point we're either going to reverse and continue lower, or we're going to break the downward trend line. Now, it is encouraging that we've had some months here of sideways trading action. That's a good base building exercise. But until we can break the downward trend line, I would not be optimistic about the US dollar. And next, gold. Chart here is building optimism, but we have not broken through resistance. We've been talking about that resistance for a long time. Until we can break out through that resistance, even though this pattern is optimistic, you can't get too excited about gold just yet. If the US dollar breaks down, continues in that upward trend, that may be the catalyst for gold to break out, but it hasn't happened yet, and so I'm more or less neutral on gold for now. Oil is in that upward trend. We are stalling at resistance. We fell back. We had run away from the trend line. We fell back to it, and now we're trying to test to break through this resistance level. I think that will probably happen, and the market for oil will continue higher, but I would remain a little bit cautious until we can get through that $13.30, $13.40 on this particular fund, USO, which represents oil prices. And finally, the fear chart. So we had a downward trend in fear. We broke it. That led to some weakness that we had last week. But on Friday, we had a little bit of a bounce back. The market was oversold. And that's why the fear chart went down, because of course there tends to be, not always, but there tends to be an inverse relationship between the market and the VXX. Market goes down, the VXX usually goes up. So my ratings then, neutral long-term on the US stock market, bearish short-term. I almost put that neutral because we are stabilizing. Canadian stocks, neutral on both time frames. Gold, neutral on both time frames. And oil, bullish on both time frames. Now, investors have defended the upward trend line, but they have not yet broken that pullback. So we're still in a downward trend short-term, long-term upward trend. And that means the market is vulnerable to further weakness because it could break that long-term upward trend line. But it could also rebound off of it. So we need to watch carefully those trends to see what's going to happen. So we ultimately just want to watch the trend lines that I've shown you on different time frames and see how they relate to one another. Gold is stuck under resistance. Oil is taking a rest. Fear pulling back, but I wouldn't count fear out yet. It is still elevated and it can change very quickly. On to the trade of the week. I was actually on holidays last week, so I did not do this trade myself. I was on an airplane, but it's a good example of how the worm strategy works. You can see that we had the little pink dot there at the open. That's what we look for. That's the stock scores action candle available to my students. So we had the action candle. We then broke through the resistance of the action candle here. We actually did it there as well, and went for a nice little run all day long, maxing out at about 6.5 RR, reward for risk, and finishing the day at just above 5 RR. That means if you risked $100, you made $500. If you risked $1,000, you made $5,000. And of course, the risk is the difference between your entry price and your stop loss price. That is used with your risk tolerance to determine the number of shares. I teach all those concepts in the different courses that we offer at Stock Scores. Well, that has been the Stock Scores Market Minutes for April 2nd, 2018. Subscribe to the channel, hit that like button, hit the alarm button if you want instant updates when I upload a new video, and most importantly, trade well.